All right, guys, welcome back to this episode on what is Bitcoin doing and the cup and handle formation. If you guys remember back about 3 weeks ago, I talked about Bitcoin and the cup and handle formation. But just to remind you on something, there's one thing that I did mention what the media was going to do mainly. Check this out really fast. Now that you saw that, and here we are, and you see how it's tilting, and could it be the one that's falling right here? It could, or it could take a good shot up to 55,000 before doing the drop all the way back down to 50,000, or it could easily just start doing it right now, and it will slowly bring its way back to 40,000. The whole point of the cup and handle formation is that it always pulls back to a point where you'll find the media, they'll always start talking about how that's it, we're going into a bear market. As the more you start hearing about how that's it, it's over for the market, the more you better double down. But what I'm doing is whenever in the past, and I have done this for many years, whenever you hear the media say something, do the opposite. You're better off. So here we are. Here's the media, pretty much. Fear and greed. Index suggests Bitcoin price is undervalued. Recent data from the Crypto Fear and Greed Index indicates that the cryptocurrency market is experiencing a period of investor fear and you just have to keep on reading that one. Analysts wonder whether Bitcoin bottomed out at the BTC bears reduced their position, and it goes into another fear. Bitcoin sinks below 43,000. And as evergreen fear sweeps the market, fear, another fear, more fear. Do you guys see what I'm saying about the fear thing? When they start pumping the fear, watch what they're doing, not what they're saying. So what is it that they're doing? Bitcoin exchanges reserves continue to go down. So somehow they are still buying, and the exchanges have less and less Bitcoin in them. They're leaving into wallets. This one over here, diamond hands remain Bitcoin whales keep on buying the dips. So there's just it's more and more that it's like there's less and less Bitcoin to buy as this keeps going and as they keep pumping out the fear part. Bought the dip, third largest Bitcoin whale, purchased 13 million worth of Bitcoin at 40,000 K, 40,000.5. So they're still buying. So it's, as you keep looking, Bitcoin Whales moves 2,000 Bitcoins from Xapo. So they moved it away from the exchange into the wallet, so to an unknown wallet. So they're not moving it to the exchange, they're moving it away from the exchange. So if there's so much fear, why is it that they're buying while they're making you get afraid and they want you to sell? So if you remember, when I talked about the cup and handle formation, where's my free line? It goes down, it goes sideways, it'll go up. And I even said it'll either be down here somewhere, it'll go down, or it'll come up here and it'll start to come down. I wasn't exactly sure where it was going to happen, but I did mention in one of the previous videos in the last week of June and the middle of August, I talked about this. And here it is, and we're having the part of the handle part. So the question is this what we've been waiting for right here before it takes off and starts to run? Because we are definitely at the handle formation of the cup and handle, and as they're buying and they're purchasing and they're putting it aside, they're making sure that they're pumping fear after fear after fear to get you to sell what you have. Okay, so we have to watch what they do, not what they say, because they love to pump fear. But of course, I have to mention, I am not a financial advisor, and always do your own research before you invest. I'm just showing you what I see and what's out there and how you can keep an eye on what's going on, because the great thing about cryptocurrency is that nothing is hidden. The whales cannot hide what they're doing. All they can do is just pump fear. So right now they're using what happened in China with the housing, and how a developer got overextended and can't pay off the interest rates. But either it's going to happen what happens here with banks and everything else. Either China's going to bail them out or they won't. Either way, If they do, this will take off. If they don't, then this might dip down a little bit more, or it'll stay here for a while. But to me, I just keep buying. That's what I'm personally doing, because if it stays here or if it comes down, eventually it will zoom up, and we're looking at about 100,000 for Bitcoin. That's the target for the year. So it'll be interesting to see if Bitcoin's going to make me a liar or not. We're about to find out. All right, so just in case I went too fast, let me go back for a second. All right, so let me hit this one. So Bitcoin exchange reserves continue to go down. I'm going to hit the post here. And of course, I'm going to link all these things on the bottom for you guys so you can see. So Bitcoin accumulation continues. Oops, let's close that out. Exchange reserves reach low not seen since 2018 for the bullish long-term signal. So they're seeing things, but yeah, they're saying the opposite. And of course, you can look this through and everything else. Let me go to the next one. All exchanges reserve. Bitcoin exchanges reserves lowest in 3 years. What does it mean for the price? So it's funny how this is the stuff that you should be looking at if you are planning on doing this long term. If you're doing the quick in, day trading, in and out kind of thing, that's a different story. But if you're looking to see, will the price go up? This is something, is it a good trade to get into? You have to follow where the money goes. And the millions and millions of dollars definitely is buying. They're not selling, they're holding. They're accumulating. It's like they know that is a direction that Bitcoin will go. And all this other stuff is just noise. It's noise to scare you out of the market. That's all. And I know that's easier said than done when your money is in there and you get scared and you see that you're in the hole. But that's what separates, the trader from, the average Joe, I guess you can say. You just have to sit there. You don't lose unless you sell. And as long as you're not leveraging, that is one of the worst things you could ever do is leverage. I know I'm ranting on here, but this is so important. Let's talk about leveraging a little bit if you're still with me on this video. Check this out. All right, so trading stocks with leverage. And the same thing people are doing. I'll link this at the bottom so you can read what it's about. But I'm showing you this so you do not do this, because a lot of people have been getting wrecked doing this stuff. How to leverage trades in crypto. This is what causes a lot of the dips that come down really hard. Trading cryptocurrency on margin, a lot of people thought it was going to be easy money, because you have a lot of people on YouTube talking about how easy it is to, make 10 times the amount of money if you borrow. And particularly what you're doing is, let's say you put in $1,000, you can borrow, another 10 grand. So you have like 11 grand working on there. That now is, instead of you just making profits on your $1,000, you're making profits on $10,000. Now, when it goes bad, you end up going in the hole, which is terrible for you. All right. So let's say you're right here in the trade and you're expecting the market to go up. As soon as it triggers down, well, the company that you borrow money from, wherever your trading platform is, they're going to sell your trade automatically, because they don't want you to be too far in the hole where you're going to owe them money anyway. So they know you're going to owe them, but they're not going to let you lose all their money. So that will trigger a sell, which will keep dipping down. It triggers more sells, which triggers down even more, and again, it triggers more sells. Leverage will always wreck you. So this is why people need to stay away from that stuff. Only use money that is yours. So if I buy right here at 47 and it takes a dip down, nobody sells my coin. It's mine. I hold on to it until I'm ready to sell it. I don't owe anybody. I don't borrow anything from anybody. It's mine. Even if it's only $50, it's still mine. I'd rather have $50 in there that's mine than borrow 10 grand that now I'm out of the trade and I owe them $5,000 because the market went against me. So you see how this can really do bad things for you? And that's why you see a lot of these big dips down, and then the market recovers, because as they made this thing come down, they're sitting down here ready to buy it right back up. So you're stuck with holding the bag while they're buying constantly these dips. Make sense on how that works? All right. All right, so that's all I got for you guys. Hopefully you guys made it to the end. If you subscribe to so you can get some more information, and I'll see you guys in the trading room.